All right, welcome back for the episode of Carnivore Trades. Today's Monday, November 28th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. A little bit before we get into the video, yes, I'm still sick, so may have some interruptions, may have to sip some tea or something at some point during this video. As you can tell from my voice there, from about 70... physically about 70-80% now. Voice is still kind of like 50%, so we're going to see if I can get through this video here without any interruptions. But in any case, market's lower today here, down 1.66% there on the spiders. NASDAQ down just about the same there, and then Dow down 1.5%. So a pretty good sell, all things considered. Here you see the VIX up nicely, just chugging along all day long. So gap up, little dump, you know, just like the spiders here, so inverse of the spiders, and then really just chugged higher all day long there. So the VIX finally starting to wake up a little bit here, and we'll just get right into it. Obviously, China, the news over the weekend with China, BlockFi also announcing bankruptcy today. Who would have thought that, right? That's a shock. And then we have Bullard was running his mouth all day long. And then we have Powell on Wednesday, and I can't for the life of me figure out why nobody is, at least that I've seen, has mentioned the fact that Powell speaks this week. Everybody's talking about, the FOMC in like 2 weeks, 3 weeks. Powell talks this week, and that's just as not as important as the FOMC, but I mean, it can move the market. So big stuff on the docket this week, but that's the reason the market is down. Another reason you could just say is we were probably going to be down anyway, because you get all the way down to the 20 handle essentially on this VIX. So the low was 20.32 there last week. We filled this gap here from August 19th, and you got to think, like, it was down basically almost 50% in what, like 5-6 weeks. So they're not just going to blow it through $20 without a bounce. So in any case, the VIX was due for a technical bounce here. It got a nice gap up though. And from a technical standpoint, just from knowing what I know about the VIX and how it trades, that's a pretty good looking candle. So like, you got a big gap, a little tail there, and then a kind of a hammer a little bit, not sort of a hammer candle, but that's not a bad looking candle there for the VIX. Bulls really want to reject this trend line, and this trend line's not perfect. The VIX, it can be kind of hard to track with trend lines here because it's a mathematical index, but if it gets above this, it could really be game on here. The only thing right now, well, it's a couple things right now that make me a little bit suspicious of the sell-off, and I can see some scenarios where we could still push up. If we look back over the spiders, I still see a couple scenarios where we could still push up into this upper trend line and possibly above the 200 moving average. But it's starting to look weaker and weaker here. But the scenarios are, or excuse me, the reasons are rather that the triple Qs are actually outperforming the spiders, which is amazing if you think about it, like considering the fact that Apple's down, Microsoft is also getting pounded. So you'd think that with the news out of China, like, there's no way the Qs are going to be leading right now. They're going to be getting hit. Semiconductors are down nicely today as well. So you think like IGV, pretty good sell today. So you'd think like, okay, there's no way that tech is going to be up for him, but it is. There's relative strength in Amazon, up 44 basis points, but still up in a down market. That's, you know, you get the spiders down almost 1 3/4. Amazon's up 0.5%, and everybody's favorite, Tesla, is up almost 0.5% as well. It's almost like an inverse, right? Like Tesla's been getting butchered this whole time as the market's been rallying, and now Tesla's finally has an update and the market's down. So a little bit of an inverse here. Looks like we're finally getting a relief bounce here. It's 3:45 p.m. So market's closing 15 minutes here, but so that is one positive here. The NASDAQ is showing leadership. That's a good sign. The Russell is not, though, so that is kind of an offset there. Russell down 2% on the day, so not a good look there. But the NASDAQ showing a little bit of leadership, at least for today. The other positive is, man, there's just no volume here. Look at the spiders. I mean, there's like 45 million shares here. It's 3:45 p.m. I was just telling my members, if the market closed at 1 p.m. like it did on Friday, we'd probably have the same amount of shares traded today. And that is not, like, when you have a market turn, like a big, like sell off, or, a pivot point, there needs to be volume. I mean, like, you can get it, like up here, it didn't really kick in for a few days, but then it really started to kick in right here. And you see the volume uptick. This is nothing. I mean, there's nothing behind this. So that tells me the big boys are not involved today. Maybe they were distributing this whole time. I don't think so. I don't really see the evidence of that. The volume declined there. But again, you got to respect price more than anything. There is a possibility that we could still, come down and test 390. And as long as we stay above 390, I think the market is safe. But one thing I said to you guys last week is this should have broken out by now. I mean, it's had every chance to break out, and it hasn't been able to do that, right? Like, we should have broke out last week. We should have continued on. I'm not saying we can't have a pullback day here and there, but this should have pushed up last week. This had every chance on a silver platter to really push up, and it just can't. It's trying to get back above this red bar here, this pivot. That's a big pivot there. Not really pivot, but that's where that opening gap is. Take a look at the volume. There's a lot of bulls trapped there. So, that's markets telling you something, especially when it can't rally on light holiday volume. It's a little bit of a sign. So this is positives and negatives. I'm starting to lean a little bit more bearish, though. We also talked about this, the fact that, hey, everybody's looking at this upper trend line here, going back to the all-time high. Maybe we don't get to it. That's a scenario there as well. And again, that 200 moving average is being defended by bears as well. So we never even tested it, not even with the light volume that came on Friday with the half day. So we'll see what we get tomorrow. And again, I'm watching Powell again. You want to see 3,900 really hold here. I don't think you really want to see 395 go, to be honest, but technically there still wouldn't be anything technically wrong with this pattern here on the spiders. Technically, you still have, on the weekly, this is still a bullish inside bar, believe it or not. I mean, big inside bar, 1, 2, 3 inside. There's nothing wrong with that. So again, from a technical standpoint, there's nothing terribly wrong with it. But if you ask me, this should have been able to push up by now. So that is a little concern here. So you can see the triple Qs here. Again, really want to see this 280. We'll call it 280. It's 280.72. We'll just say 280 to keep it even. But that area really, you don't want to see a lower low there. That's going to show relative weakness with the NASDAQ and the Dow. Finally, the Dow is starting to break trend a little bit here. If we look at the futures, this is a pattern I've been watching. This rising wedge played out very nicely from July to mid-August. And you got one building up here as well, and that's dripping below that trend line. That's breaking down. So the Dow finally starting to relinquish some of that money flow that it's just been seeing over the last month, because it's been a recession. The Dow is kind of a recession haven, right? So you got blue chip consumer staples, Amgen, Walmart, Target, banks like Goldman, United Health, just safe, boring names like that make up the Dow. And that's why I say when the Dow leads, it's not a good sign. It's not bullish. And it has been leading a lot lately. Look at where the Dow is now compared to a month ago versus the NASDAQ. Not good here. So in any case, but, light volume here. The dollar index is holding up well. That defended that double bottom there really nicely. So we'll see what we get tomorrow. Let's get into some sectors here. So we talked about the semiconductors a little bit earlier. Again, this bullish pattern's not terrible. It's still just choppy bullish consolidation, but I prefer to see it not do this. You do have lower highs here versus the spiders, which has higher highs. So that's not a good sign here. IGV, same thing, lower highs there. And again, we've been noting IGV has been weak for some time here. Dow Transport, same exact thing. So seeing a little bit of weakness there with a high, then a lower high versus, the Dow, which made higher highs, versus the spiders, which made higher highs. So that's not the leading indicator you want to see. You don't want to see the transports and the semis showing relative weakness on a technical basis. So that is, again, you guys follow me all the time. I talk about that almost every single day here. But Dow Transport's a little bit on the weaker side. If it does manage to push up, again, the level has not changed. It's still around 15,000. That would be your major sell level, but I'm not so sure it even gets up there at this point. You do still potentially have higher lows, so we'll see how it behaves, especially with Powell kind of holding the market in his palm going into Wednesday. So again, we'll just kind of tread carefully here, and take it one day at a time. One other thing, as we get over to interest rates, I want you guys to keep an eye on the 2-year. That's an inverse head and shoulders, and that has triggered as of today with that gap up on the 2-year. So if the 2-year starts to rally, that could be a good sign for the market, especially if it starts to steepen that yield curve out and reduce the inversion. Now, the thing is, though, a lot of recessions don't happen until the yield curve starts to, the 2-year starts to rally back up and bonds start to rally. So it could ultimately, I mean, I think the writing's on the wall no matter what, but near terms, it could be something to keep an eye on there. But the ZT 2-year futures did trigger that inverse head and shoulders today. It can fail with a daily close below that neckline, though. So just be aware of that. The 30-year was negative. 10-year also, well, 10-year did pop back to the flat line there, I guess, if you look at the TNX. Yeah, so the futures did, but the TNX finished green by the close. But either way, it kind of looks like the dollar, right? Just a weaker version of it, or a stronger version of it. So that down move, little double bottom, right? And we look at the dollar down move, double bottom. So again, they're trading in a 1-to-1 correlation for the most part. Anyways, on to home builders XHB. I still don't have any problem with this pattern. This is still a nice inside bar. I do like, XHB, ITB in this situation. VNQ, a little bit of an ugly candle today, but still no technical damage until you break that green bar low there at 83.95. If you close below that, this is officially off the table, and this is in a sell-off mode. But for right now, it's still technically safe. XLF here, another little crack in the armor that I'm kind of noticing. Yeah, XLF did make a higher high today, but the 10-year was green and the dollar was green. And typically, lately, XLF has been green with this kind of high yield play, right? With yields up, XLF has been up. XLF's down 1.76% right now. So that's a pretty good sell-off, possible little M-top there on the XLF. And this is with light volume too. So a little bit of a change in character there. XBD, same exact thing there. Almost like you have like a move up and then a little micro kind of inside bar there. So back below the 20 moving average there on XBD. Little change in character there. And I want to talk about XLE as well before we get into crude, because it's the same exact thing here. Big gap down on XLE, down almost 3% on the day. And again, that's with yields up, 10-year up, XLE up. That's been the correlation for quite a while now. And the XLE is not doing that today. So these are changes in character now that we have to pay attention to in the market. Market's talking to you when you see stuff like this. So XLE down almost 3% on the day. That is now a divergence from the recent memory, recent norms, but something to keep an eye on there. Now crude, it hit the trend line finally. Did I buy it? No. And it's got pretty good volume there. Good volume there on the futures. The only thing that's keeping me out of this right now, again, like I said, is that inside bar low. I don't like how you close below that on the weekly basis. That signals weakness to me. And furthermore, just the fact that, bonds are starting to rally. You see the TLT there. I'm not convinced of what's going to happen here. If the market starts worrying about a global slowdown, or if China's, I don't know what's going on over there. Every day it changes. And if they start to really shut down again, it can be inflationary, it can be deflationary. If we have a global recession, does that drive demand, or does that weaken demand? These are things the market's going to look at. It's not going to look at the CapEx problems 5 years out that, I know a lot of you guys are looking at, and I agree with a lot of you guys on it. But in the near term, I don't know if the market is really going to look at that. So I just want to make that clear there. It hit the trend line. It could still rally. I just think that statistically the odds are a little bit weaker of it putting in a tradable bottom here. So I just want to make that kind of clear to you. I just see it as more nebulous right now. XLE we already covered here. XOP same thing, down just under 4% rally. Again, this one, we'll see how it behaves at that 50 moving average. You do have a little bit of a level there. There's a pivot at 145. If you get through that, I think it ultimately wants to go to 125. Then OIH, same thing. So as soon as you lose 280, it's really back to that 260 area when I've been telling you guys that I like that level for a correction to take place on OIH. Anyways, nat gas holding up pretty nicely. Again, this is the outlier. This one marches to the beating of its own drum. Just doesn't want to fade here. You basically you had a look at all this price action here. Big gap up, sell off, huge rally, then an engulfing reversal, then a major gap up. Then you almost filled the gap this morning. Just crazy price action. I wouldn't do anything with it right now. It's all over the map, but nat gas holding up well. We talked about the dollar. Nice little double bottom defense for now. If it gets rejected here and puts in a lower high, or it gets rejected at the 20 moving average, again, it probably wants to go down to that 104 area, maybe 103, somewhere in that range. But for right now, dollar's holding up well. And as you'd expect, gold reversing. But it did gap higher, and then it came back in. So showed a little bit of relative strength at first. I don't see anything terrible with gold right now. Same thing with silver. I want to see it stay above that 20 moving average in the short term. But for right now, it's holding up okay. And then platinum is actually really the best one right now. Up 1% with a strong dollar. So we'll take that for what it's worth. It's holding up nicely. And then copper here, basically kind of on the flat side. Not really in love with the pattern at the moment. Anyways, let's get over to Bitcoin here. There we go. So Bitcoin, again, not doing a whole lot here. 16,300, that's the print right now. Again, this is just an inside pattern here. Bearish inside bar. It's set up for a move lower. It was really unaffected by the BlockFi news today, for the most part, at least on a daily basis. But this is not a pattern of strength, and really nothing has changed here. You still have a bearish inside bar, and I'm still looking for the low 10 to 11, 12,000 area here. It's just really a matter of when at this point. But yeah, crypto under a lot of pressure here. And there's talk of, I believe, Coinbase's bonds are now trading at a pretty good discount as well. So also not a good sign here moving forward. Anyways, guys, market's about to close. Spider's getting a little bit of a bounce here again. We'll watch tomorrow, see what happens. More Fed speakers will probably come out. But again, it's going to be all about Powell Wednesday. And, you know, if we can get, if we get one more gasp up here, then yeah, we can get up to this trend line. But right now, this 200 moving average is being defended. Again, the only thing that I don't like about it is there's no volume behind this sell-off. You see volume come in, then this market is in serious trouble. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.